Hello traders and welcome to another video review. Today is Monday the 7th of June 2021. Let's take a look at the Forex calendar. What do we have here? Well, basically, as you can see, no important key data had been released overnight. We got some leading indicators from Japan. We got unemployment rate from Switzerland. Apparently it's dropping from 3.2% to 3.0%. And the factory orders from Germany were way worse than expected, minus 0.2% versus 0.4% expected. CPI in Switzerland 0.3% in line with the expectations and bigger than the last month 0.2%, and the foreign currency reserves are shrinking to 902.5 billions. During the London session, there's only Halifax house price index data from UK scheduled for release 8:30, and Centix investor confidence data 9:30. New York session, the only data is consumer credit scheduled for release at 8 p.m. So very poor Forex calendar for today. So let's go straight to the charts to see what is going on the markets. The first chart we would like to analyze is British pound. Why? The first thing is that the British pound is right now testing the key technical resistance made after the high from 24th of February around the level of 1.4241. As you can see, it's been tested once, it's been tested for the second time, and then the market dropped towards the technical support around the level of the lows of the 27th of May, 1.4091. This level so far works for bulls, so the bulls are bouncing up from this level, but as you can see, the momentum doesn't confirm the up move. It's still positive, but right now it's around the level of 53 points, so any violation of 40.91 will definitely lead towards the test of the level of 40.17. This is a strong technical support. It's been tested already on 13th of May 2021, so any violation of this level means, first thing, we are under 1.4. Second thing, we are out of the channel, which is kind of a bearish in the near term for British pound. On the other hand, if this is the level that will make the British pound to bounce, of course, we have to break about 1.4241, and then the targets are 1.4344, 1.4377. So please keep an eye on this target so far. However, the level of 1.4241 is the key technical resistance for the pound. So that's the scenario for the pound. But let's take a look at the US dollar index due to the recent data from the US labor market, which is of course non-farm payrolls. What is going on here? The first thing is that we possibly have completed the wave C. I'm saying possibly because the recent bounce is kind of a substantial. The last move in the wave B was 1.16%. So right now the last bounce is 1.24%, as you can see here, 24%. So they are almost equal. As you can see, we got some market response to the NFP data, despite the breakout above the 90.38, which is the low of the wave A, and therefore is a key technical resistance. We made a new high at 90.60, but then of course the close was way below the key technical resistance, and those two corrections are still pretty much in line in the terms of the pips. So right now the US dollar index should return to this zone here, the kind of a ABC corrective cycle to the upside zone. 90.38 and 89.66. This is the consolidation zone, the kind of you know, maybe trendless zone for some time now. Please take a look at the RSI as well. We just broke above 50 points, high 52 points was made here, so that's not really impressive. After this candle was made, market dipped towards 46, so right now we are still trading below the neutral level. Any pressure from bears would likely push the prices towards the lower levels of this channel, of this consolidation zone, 89.66 or even 89.51, which means the RSI will drop back under, even deeper under the 50 points level. So it might be quite obvious that this ABC move might not be completed yet, and might have another leg somewhere here unfolding right now, because this move up, as I said, 1.22% is clearly in three ways: A, B, and C. So still not a clear situation on the US dollar index. Key technical resistances, it wasn't even touched, wasn't even hit, tested during the weekend. So please give US dollar a chance to develop another cycle. Very interesting reaction on the spot gold market. As you can see, we got very nice correction after the 1,916 high was made here. So let me just point it on the chart. That's a temporary high. Because why is temporary? Because we are still heading towards this zone here, 1,964, 1,994. So this is the target zone. The recent correction was, in terms of the percentage, kind of a big one. Yes, 3.15. So that's the biggest correction. As you can see, all of them were 2.6, 42, 2.02. So that's definitely 1% higher correction, and definitely this means something. But if you consider the fact that the market was extremely overbought, right, and it had been trading in this channel for at least right now it's 2 months, over 2 months. So please consider the fact that this pullback, as long as it stays inside of this channel, above this blue trend line, and above the 1,848 technical support level, it still is like more like a pullback than a big correction, despite the fact that it's 3.15%. There is too many technical things here, trend line, support, channel, that could serve this market as a support, as a way to bounce higher and follow towards 1,965. This channel is still valid. Market might be going up this week, as long as it stays above 1,848 and above this blue trend line. So please consider that scenario in your analysis. The other thing is that we dropped to 55 points. So this is typical pullback from the overbought market conditions. We should stay above the 50 points zone, so the market will still be controlled by the bulls with the positive sentiment, with kind of a relatively strong and positive RSI. So the momentum should very, very easily test the recent high 1,916 and go higher, go towards the key technical resistance zone, as we know, 1,965, 1,994. So that's the outlook. That's the outlook for the spot gold market, despite the fact that we had kind of a big, nice correction recently. So that's everything for me for today. Thank you very much for watching, and I hope I see you guys tomorrow. Bye bye.